Hello, everyone. Welcome to the webinar. We are waiting for a few more seconds so that we allow the rest of the people to also join in. Thank you for your patience. Hello, we can hear you. Hi. Hello, everyone. Mr. Swami, you can actually share your screen.
Can I get my camera on?
We can see your screen.
But I wanted my camera on, Anu. We are controlling my camera. Okay, leave me. Good evening. My name is Swaminathan. I'm the CEO of the company of Iris. And I'm honored to invite you to this webinar on the quality issues. You know, I want to make one thing absolutely clear right at the beginning. It's not our intention to find fault. It's not our intention to point to companies that have made mistakes. It is not our intention to point to auditors whom have skipped something. It's our intention to be constructive. Even as I'm speaking to you, my colleagues are sending each and every one of you a mail with the list of the 707 companies that we reviewed for quality. The reason we are sending you the complete list of companies is so that you can then pick the companies that you may have audited and refer back to us if we found mistakes in any of them. Out of the 707 companies that we reviewed, we found mistakes in 67 of them. It's not our intention to make the names public. It's our intention to have a constructive dialogue with the company and the auditor to point out what mistakes were made, how did we find those mistakes, and to ensure that the mistakes are not repeated in the future. I request you to take the seminar in that spirit. Every country that we go to, we have done a seminar like this. Every country that we've gone into, we've actually reviewed the quality of the filings. When we started XBRL work in India, we found that 5% of the public companies had mistakes in their financial statements. The reason why this European finding is very serious is because it's 10% of the companies that we reviewed. So we reviewed almost 1/4 of the companies that were listed, about 20% of the companies that were listed, and in 10% of them we found mistakes in just the primary financial statements. If you add to this the footnotes, the mistakes would be more. If you add to this the XBRL tagging that's coming up, there could be wrong tags. There are ways of preventing this from happening, and that's exactly what we want to talk about. We want to share with you the mistakes that have been made. We want to share with you how the mistakes can actually be avoided. We are a RegTech company. We work in about 36 countries. We have clients in 36 countries. In many countries, we work with regulators. We help them collect data from the people that they regulate. We work with central banks. We work with capital market regulators. We work with business registries. We work in countries like Singapore. We work in countries like Argentina. We work in countries like India. In Europe, we work in Macedonia, and we have enterprise clients in countries like Germany and France and Estonia and Spain and Italy and what have you. We've been in XBRL for as long as I can remember. We're one of the earliest XBRL startups in India, and we're one of the earliest XBRL startups in the world. Our work in XBRL even predates the mandate of XBRL in any country in the world. The work was done by us to convert historical data of US public companies into XBRL for Edgar. So when we convert the whole thing to Edgar, of Edgar into XBRL, that's when we got our hands dirty, and that's when we learned the power of XBRL. Since then, we've done work in 36 countries around the world. And in every country, there are newer and newer mistakes being found. We did this exercise so that people realize that we are heavily invested in Europe, and we want to be part of this movement to create good quality filings in Europe. This cannot happen unless people are aware of the kind of problems being made. We work with partners all over the world. Every one of you in this room today is working for a firm which is a partner for us in some country or the other. We work with Deloitte in some countries. We work with EY in some countries. We work with KPMG somewhere. We work with PwC somewhere. We work with GT in certain countries. We work with Mazars in some countries. So we actually have been working with accounting firms across the world. We bring in the XBRL domain. We have conducted thousands of hours of training programs for accounting firms. You're all fantastic at audit, fantastic at accounts. XBRL is a new subject. Just as you are good at audit, we're extremely good at XBRL. And across the world, almost 5 million filings and more have actually happened using our software. About 1.5 million entities across the world have used our software. Many regulators take our software, and give it for free to the enterprises, who in turn use our software. But the message I want to leave you with is that we are consistently at the top of the rankings of quality. If you look at the chart on the right-hand side, the table of quality, you will actually find that we top the quality rankings in America. There are many companies you will see in this list who are providers of solutions in Europe. Many of you have partnered with them. We have invited you to the seminar, even though we know that we are working with some of our competitors, because we want you to appreciate the quality of work that we actually do. And so what if we don't work right now with you? We're hoping that in the future, we will be able to work with you. We are doing this webinar because we would like you to partner with the best, and we are the best as far as the quality is concerned, just because we've been doing this so often. You know, somebody once said, when you do something for 10,000 hours, you get to be good at it. There are many people in my company who've done this for 10,000 hours and therefore extremely good at it. And they're able to detect problems, they're able to find improvements, and they're able to provide value-added inputs to auditors as well as enterprises, and above all else, regulators. We work across the world. So all the countries in green are where we work, and you will see there aren't many places that we have left. I think with our entry into the Scandinavian countries, we technically are in the Arctic, but I don't think we'll be in the Antarctic. But I think we're not doing too badly as far as geographical spread is concerned. We work with a cross-section of companies across the world. Global Indian companies, Reliance Industries from India, you would have heard of, because he's now he's in the race to become the richest man in the world after the recent deals that he's done with Google, Facebook, and a few other people. Bata, the footwear company, you know, it's from Canada. Old Mutual, we work in South Africa. We work with BMW, I think in South Africa as well. We work with the Colruyt Group, the biggest retailing company in Belgium. We work with Endesa, one in Spain, one in Italy. We work with Nordicon in Estonia. We work with small companies. We work with big companies. And to every company, we provide the same level of satisfaction. We provide the same level of product quality. You know, we all know this mandate. It's basically moving from PDF to XBRL, and that's where the problem lies. If you have a filing in PDF, it's difficult to spot a mistake. If you have a filing in XBRL, it's very easy to spot a mistake. All that it takes is to take the data, run it through our validator, run it through business rules, and voila, the mistake actually pops out at you. It does not take long to find the mistakes. Just imagine, we have converted the documents of 707 European companies into IXBRL. I mean, that's more than the market share of any of the providers that will actually materialize in the next 1 year. We did this because we want ultimately for top quality filings to emerge from Europe. Now, the mistake that they made in America was to have the HTML filing and the XBRL filing coexist. As a consequence, there have been very amusing problems. For example, GE, that small company called GE, which has a presence in every part of the world, they made a mistake in their filings about 2-3 years ago, where they had one number in their HTML filing and a different number in the XBRL filing. So the reason I want to say this to you is because you can be a big company and still make a mistake. You can be a small company and make a mistake. Now, people across the world expect small caps to make a mistake, but our findings have shown that there are more big companies making mistakes than there are small companies. The good thing is, at this stage, it can be passed off as carelessness. But in an XBRL world, if those mistakes start coming up, I think the market will take it very seriously, and I think the market will not be very forgiving. I cannot but mention the story of Wirecard that happened in Germany. So we went back in time all the way to 2014, 2015 to spot problems, inconsistencies in the Wirecard filings. Now, all mistakes start small, and we have found small mistakes going back to 2014 and 2015 for Wirecard. The reason I'm saying this is if a company wants to deliberately do something wrong, it will start with a small mistake that doesn't get noticed, and then the mistake will balloon up. That's what happened with Enron. That's what happened with Bernie Madoff, and that's what happened with Wirecard. And we are only working with public data. We're not even working with private domain data. Imagine what could happen if XBRL were leveraged internally within the company for audit. Today, with XBRL GL taxonomy available, I think many of you auditors could actually possibly look at the use of XBRL GL taxonomy for your own audit purposes. And I think catching those mistakes before it hits the market is wonderful for the company's reputation and for the auditor's reputation. So the ESEF mandates, I don't need to spend too much time on this. We all know what the mandate is. It starts next year. It starts from 1st January onwards. My only focus is quality, 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 quality. I would recommend that when you audit your companies this year, you recommend to them that they start looking at the detailed footnotes as well, at the notes as well. Because if there are so many mistakes in the primary financial statements, and I know, I also run a public company, that the notes to accounts is where very often a lot of things stays hidden. And I think if companies want to protect their reputation, they need to look at the notes to accounts right away instead of waiting for 2 more years. It may not be mandatory right now, it's voluntary. But I think if they do this as being voluntary, I think if they adopt the practice, I think it'll be good for all of us. I'm now going to hand over my screen to Anu. Anu is a research director. She has been with us for a long, long time. She's done more taxonomies across the world than I know. She's been involved in the product design. And purpose of this presentation is not just to basically share with you the quality, but also to invite you to work with us going forward. We will also talk about an audit tool that we've just launched, which will allow you to catch some of these things. And I think if you want to catch quality, I want you to know that we are the best. Anu, over to you.
Yes, thank you. So welcome everyone for today's webinar. I'm just going to share my screen here. Thank you, Swami, for setting the context. So while the focus of today's webinar is actually on the quality, especially on the publicly listed companies and how ESEF is going to kind of shape out, especially from an audit perspective. So we at IRIS, since we are very passionate about XBRL as a standard and IXBRL as a standard, so we went ahead and actually converted 707 annual reports of public listed companies. So one of the main objectives of the study while we were trying to do was to kind of answer a few questions. We wanted to take a look at overall, how is the existing reporting of public listed companies? How accurate, how complete is it? And will this new reporting format called IXBRL will help in improving quality? And as there are kind of many software, many service providers in the market, what is the role of a software or a service provider in shaping up the quality of the annual reports, which is going to be in an electronic or in a digital format from next year onwards? And we also wanted to see how aligned is the ESEF taxonomy in this entire exercise, and to what extent companies will have to create their own specific custom elements. So what did we do? We actually went ahead and picked a sample of 707 companies, which actually constituted about 20% of the listed companies, which are supposed to comply with the ESEF mandate. And each country, we took a sample of 10% of the listed companies in that particular country. We managed to make sure that there is an equal or a balanced representation of both large caps and small caps, the sample that we took. And in some countries where the number of listed companies is higher in number, for example, in like France and Germany, we actually went beyond the 10% of the number of companies in that market. So what was the approach that we followed? So we identified these companies, we downloaded their PDF or the annual reports from their website. We converted this annual report, which is the 5 primary financial statements, which is the scope 1 of the ESMA mandate, into our XBRL. And once we converted the annual report into our XBRL, we ran these XBRL documents through a validator. So we also have a validator, which is XBRL International Certified. So we ran these documents through a validator, and the validator gave 2 types of results. The first type of result were rounding off mistakes, which were actually ignored. However, the remaining type of mistakes were actually genuine reporting mistakes, which we went on to further analyze. And in terms of effort, this is what it took. So across 27 European countries, the sample was 707, and this consisted of 27 different industries or sector classifications. So 50 XBRL experts who are chartered accountants and who have experience in IFRS reporting and XBRL were the ones who went ahead and created the XBRL for the 707 companies. And we tagged close to about 101,370 concepts, 101,370 concepts, which itself is like a huge number. And in doing this entire exercise, we took about 10,000 man hours. And here are some quick results. So across the 707 companies, we saw that about 9% of the sample actually had mistakes. So that's kind of pretty big number, especially considering the fact that these are all audited annual reports. And overall, if you see, there were some countries who had lesser percentage of mistakes. For example, we saw, Germany, which had 3% of mistakes. France had 4%. For example, some countries like when we saw like Italy had about 10%, Latvia, Lithuania also had like higher percentages. So every country had its own, nuances when it came to the type of mistakes that we actually found out in these companies. We further move on to elaborate what are the type of mistakes and where were these mistakes identified. So it was kind of very surprising for us to kind of see that 74% of the mistakes were actually totaling mistakes. So what we mean by totaling mistakes is, we all know 1 + 1 is equal to 2, but we've seen some companies report a 1 + 1 is equal to 5, which is actually absolutely not correct. Followed by totaling mistakes is what we call as mismatch values, which accounted for 21%. What we define as mismatch values is that, for example, if you have profit and loss reported in your income statement as 100 million, however, in the cash flow statement, you're reporting another number, which is 105 million, which is absolutely incorrect, and it's not in sync. And followed by the mismatch value is what we saw as incorrect sign, which is actually about 3% of the sample that we took. But usually what we have seen is that internationally, across many companies, typically companies tend to get their numbers or the signage wrong. After this kind of incorrect sign, the next category of mistake that we went on to identify is what we call as incorrect dates, which accounted to about 1%, where the companies actually got the date wrong in their annual report. And in which statements were the most mistakes? So we found that 53% of the mistakes were in the cash flow, followed by equity statement, which is around 16%, and followed by the balance sheet, comprehensive income statement, and income statement. So one of the things that we actually saw was that, the complexity of the financial statement, for example, the cash flows, there are a lot of, positives and negatives, inflows, outflows, and similarly, an equity statement is also a very complex statement from a reporting perspective. And the highest amount of mistakes were actually in these 2 statements. We also went on to see which type of companies or which industries had the highest amount of mistakes. So in our analysis, what we found was that it was the banking, insurance, and financial services sector which had the highest amount of mistakes. This was followed by the consumer goods services, manufacturing, real estate, basic resources, technology and communication. So even here, what we can identify that the nature of the industry or the sector of the reporting entity has a direct correlation between the mistakes, because we know that if you're auditing a bank, or if you're auditing an insurance firm or a financial services company, the type of reporting that they have is much complex compared to maybe like a commercial company, as an example. Further on, we also wanted to see how aligned is the ESEF taxonomy in relation to the reporting which the companies are doing. Once again, we've gone ahead and picked the same industries that we saw on the last slide. And what we saw was that out of a total of 101,370 items that we tagged, there were 10% concepts where we had to create custom elements called extensions. So what this means is that ESEF taxonomy has thousands of elements in the taxonomy. It's about 5,000 elements. But for about 10% of the line items in a particular annual report, we had to create specific elements simply because the ESEF taxonomy did not have a specific element in the taxonomy. And further, if you're actually auditing, or if you are actually going ahead and preparing an RXPRL, again for a banking, insurance, or a financial services entity, or a real estate entity, or a utility entity, the percentage of extensions is actually higher. In fact,
something?
Yes, please.
One of the things that you might want to keep in mind when picking a software is the ability to do extensions in a visible manner. There are softwares in Europe who basically run the whole thing through a black box to generate an extension. That's not the best way to do an extension. I think it has to be collaborative between the auditor and the company. I think there has to be an iterative process. I think just running it through a grinder and out comes an extension is not the way to work. We are aware of softwares where they say, trust us, will be generated. We believe that may not be the most optimal way of doing things. We think the right way to do it is collaboratively. We believe the right way to do it is to do it transparently. And the right way to do it is through interaction between the various people who are part of the process. Anu?
Thank you. So next, moving on, now that we've kind of seen the overall statements which had mistakes, the overall categories of mistakes, we'd now like to present to you and show you how these mistakes were actually identified. Here are a few examples of each of the categories that we just explained. So as an example, the first category we saw as totaling mistakes. So in this particular annual report, you can see that this is a cash flow statement. There is net cash generated from financing activity, which is 181 million. But if you take a look at the components here, so the total should ideally be 18, not 181. So when we tagged this financial statement and when we ran the validator, there is a particular check, which is called as a calculation check, which actually goes ahead and checks if what you're reporting and what the totals are getting reported are correct or not. And therefore, what you see here on the right-hand side is a validation result, which shows that the cash flow used from financing activities, the number actually gone ahead and reported in the annual report is 181. However, it should have been a minus 18,000. So therefore, it has flagged off that there is an inconsistency and there is a difference of 199,000 euros in this example. Similarly, moving on to the next category of errors where there was mismatch in values. This is again an annual report, which is where I'm presenting to you an income statement. The company has reported profit for the year 10,187,228. So this profit for the year, if we see this report, this company has bifurcated the profit for the year between the parent entity and the non-controlling interest, which means the same total is represented between parent and non-controlling, and therefore the final total value also should be the same as what is reported here. However, when we tagged each of these numbers and validated the file, there was another category of validation result which came up, which is called mismatch in values. So if you see here, what this mismatch in value shows is that there cannot be two different numbers for a single concept called profit loss, because it's logically incorrect. You cannot have two different profit values or loss values for a single period, and therefore it's kind of given this error. And further to move on, the next category, which is incorrect signs. So this is a very interesting finding here. So if you see, this is again an income statement. The company has reported an operating profit of 27,308 euros here. And they have some expenses totaling to 902 euros. And therefore, the company is actually supposed to report a profit before tax, which they have, by the way, in the text of it. But if you actually see the number, they have reported as a loss in brackets. So what happens here is that when we again run this particular annual report or the XBRL document through a validator, the calculation inconsistency starts triggering off, showing that, hey, by the way, the company has reported a loss here. Instead, it should have been a profit. So this would be like one of those very terrible things that the company is actually reporting. They would have never had the intention of reporting a loss, but because of some mistake, it is some probably a carelessness or a typo. It could be any of those reasons. But instead of a loss, they have instead of a profit, they've actually reported a loss, which is actually a very terrible thing. And of course, it also has an impact on the investors of the company as well. Moving on to the next one is incorrect date, where you could see that there's again a cash flow.
1 second. There's a question from Maxim Ivanov. Have you analyzed the percentage of rounding errors in total errors in subtotals and totals? Yes, sir, Mr. Ivanov, we have. In fact, where we found rounding errors, we did not treat them as a mistake. Those are ignored as far as this study is concerned. If I start looking at rounding errors as mistakes, I think I'll have many, many more companies. It's logical that many, many large companies, when they round it off to second place decimal or to units from hundreds of thousands to millions and so on and so forth, these will come. So while we have found rounding errors, we have ignored them completely. Thank you. Anu, go on.
Okay. So while these mistakes that I'm trying to show you are the mistakes other than rounding off errors. So these are kind of actual reporting mistakes in the company. And in this example that I'm showing you, when we tagged these two the statement for both the prior year and the current year, again, there was a validation warning which came up showing there are mismatch values, meaning there were two different values for a concept called receipts from sale of goods. And when we went a little beyond to see why this has come, we saw that this particular report had the period identical for both the columns. So that's the reason why there was this mistake which got flagged off. So now that we know that when you tag information and once the information is in a machine readable format, there are many rules like this in the XBRL taxonomy defined by ESMA that triggers and alerts users, investors, regulators of any kind of inconsistency and reporting irregularities, which is actually in the annual report.
So 1 second. While this, can you go back to the previous slide? Yeah. So while in this slide you see the company having two dates which are the same, which is not the way it should be. We have an amusing situation of an Indian company which had an identical cash flow statement for 5 years. All that they would do is change the date. Year after year after year, number for number, decimal place for decimal place, the numbers would be identical, except the dates would change every year. So there are instances like that as well. Anu, go on.
Okay. So now that we've kind of seen how mistakes can be identified very easily when the information is in a digital reporting format or in a machine readable format, I think I'd like to focus the rest part of the webinar on two things. So from an audit perspective, what are the things that an auditor needs to be aware of? What are the things they need to go ahead and check for? And if you are kind of reviewing an XBRL document, what are the things that you need to take care of? So I'll kind of explain a few things here, and then I'd like to actually show you like a live presentation and a demonstration through our audit solution.
Anu, 1 second. In every country that we've been working in, for example, in India, there is no audit requirement. In the US, there is no audit requirement. In Europe, I think it's wonderful that you have an audit requirement. Very often, I think the lack of adequate training for auditors has been the problem. So one offer I'm actually making to you is if in every one of your firms, you want a comprehensive training done based on our international experience, we are very happy to do that for you. Anu, go on.
Okay. So moving on to the next section in terms of audit and in terms of review, what is required to be done. So while we know that in many countries XBRL has been there, but audit of the XBRL tags has not been mandatory. But in case of ESEF and the ESMA regulation, it is necessary that the documents which the companies are preparing in our XBRL also needs to be audited. So this has been the mandate which has actually come in from ESMA. For example, countries like Germany have already passed a law for audit of ESEF documents. So from an auditor perspective, what happens? How does your life change? So currently you've been going ahead and auditing, PDF files, the numbers, the text and information in these reports. But going forward, you will not only need to go ahead and audit all of these things, but in addition to this, you will also have to go ahead and audit the tags which the company has gone ahead and used, and also a bunch of other technical and XBRL specific requirements as defined by ESMA, which will actually walk you through in the next set of slides. So it's not just the human readable layer that needs to be audited, it is also the machine readable layer that needs to be audited as per the scope of the mandate. So now, even before moving on to any of the review aspects, I thought it's kind of useful to kind of explain in a very quick and an easy manner, what does this whole activity entail, right? So in the next few slides, what I'm going to show you is that, from a review perspective, what are the things that an auditor or a reviewer needs to make sure of or take care of. So let's say there is a company called Company A who's reporting sales of 7348 million euros for the period 2019. So this particular number, by the way, should have an XBRL tag. So this number 7348, though the company has reporting sales, there is a tag in the ESEF taxonomy, which is called IFRS revenues. You can see here IFRS full revenues. And this is the closest accounting tag or the concept which is available in the taxonomy. And therefore, this number should be mapped to this tag. So apart from the tag, there are 3 other XBRL attributes which needs to be associated, which is called as a period, unit, and scale. So when you go ahead and associate that this is for a 12-month period, and this particular number is reported in euros, and it's reported in millions, that is when this particular number has a complete information. So that is when the machines are able to read and interpret that a 7348, what the company is trying to report is revenue for the period 2019, which is reported in 7348 million euros. So XBRL is nothing but like a barcode, which is able to read information because there is information actually stored in a particular manner. So apart from the fact that I know that a lot of companies are actually focusing on getting the right tags, and of course there are a lot of audit firms and services firms who are actually offering tax selection services, mapping services, etc. What I'd like to highlight here is that it is not only the tag that needs to be right. There are many other things which also has to be taken into account, which I'll be explaining in the next few slides. So in terms of review, what is needed is that the entire annual report, which is in XHTML format, needs to be reviewed and audited, and also the XBRL tags embedded in each of these. For example, in this little screenshot, you can see each number has a highlight, which means that there is a machine readable tag embedded behind that number. So as an auditor, as a reviewer, you need to take a look at the tag which has been used, the unit, the scale, and the dates. So this is on the first part. Apart from this, every auditor and reviewer also needs to review something called as a company taxonomy, which I'll kind of explain in detail, because a lot of people, I think from the trainings that we are taking and the inquiries that we are getting, I think a lot of people are still not very clear on what a company taxonomy is and what needs to be done in a company taxonomy. So in the next few slides, I'd like to little emphasize on what needs to be reviewed in a company taxonomy and what does it even consist of. A company taxonomy is nothing but it's a set of 4 XML files that every company must go ahead and prepare. So while the ESEF taxonomy is like the big Bible that companies need to follow, but every company has to prepare its own taxonomy for the simple reason, ESEF taxonomy may have about 5,000 concepts, but the companies are not reporting 5,000 items in its primary financial statements. They may be reporting maybe 100 or 200 or maximum 300 items, right? So therefore, every company has to prepare its own taxonomy. And the overall logic, what needs to be applied is that every company is supposed to go through its financial statements line by line. And wherever possible, companies are supposed to go ahead and pick an appropriate tag from the ESEF taxonomy itself. And where they do not find an appropriate tag, they can go ahead and create custom elements, which is called extensions. And extensions, by the way, have been into place for many, many years. So ESMA has also introduced the concept of extensions because it's expecting companies to report more granular information rather than just skipping information. So again, once you have created extensions, it is like, for example, if I'm an airline company, I would say, revenue from maybe ticket sales. Or if another company is, a product company, they may call it, revenue from product subscriptions. So given the choice, every company will create its own extensions, and therefore information is not comparable anymore. In order to overcome this limitation, ESMA has introduced a brilliant concept called anchoring, which actually says that whenever companies are creating extensions, they are supposed to go ahead and report what is that the company is trying to report. Again, there are guidelines for anchoring as well. And of course, the company taxonomy also consists of something called as link basis. Again, from our experience, we've kind of noticed that, again, a lot of firms are not very familiar with things like company taxonomy, link basis. So in the next slide, I'm going to explain a little bit more detail of what a link base is.
Anu, just 1 second.
Sure.
Can you go back to the previous slide?
Yes, please.
So I want to spend a minute or two on extensions. There are reasons why company may want an extension. So there are companies which want to promote extremely good investor communication. Therefore, they want to disclose more than what they are required to disclose. So the ESMA taxonomy may have its limitations when the company wants to report much more. For example, while ESG is now part of the taxonomy across the world, it wasn't a part of the taxonomy for many years. So some companies would report ESG in their annual report. And I think if you wanted to report ESG digitally, I think you would need extensions. So one reason why companies need extensions is because they simply want to be seen as practicing extremely good investor behavior, the investor communication. A second reason why a company may want to have extensions is because it's in a new industry where the language is yet to be discovered. For example, if today a company in the blockchain space wanted to disclose something more than what's available, blockchain companies didn't exist, Bitcoin companies didn't exist about 6, 7, 8, 9 years ago. So if you had companies in the Bitcoin space wanting to disclose items that are not part of the taxonomy because they're in a unique business, because they're in a unique, unusual business, if tomorrow, for example, Tesla sends a man to the moon, and therefore that company is set up and the company goes public, what would that company have to disclose? What all would they disclose? So the variables disclosed by the company sending man to the moon will be of a very unique nature. So there are several reasons why extensions are important. Having said that, while in the US GAAP, there are US SEC taxonomy, there are about 18,000 elements, companies went around creating their own extensions merrily. At last count, I think there were almost 700,000 extensions in the US taxonomy. I think ESMA has done a very smart thing by creating the concept of anchoring, by saying that whatever you're disclosing is linked to something in the standard taxonomy. So please provide the linkages so that I can see the context along with it. So tax extension is not a bad thing. It has to be handled properly. And that's where I think a lot of good reporting will happen. And that's also where a lot of bad reporting can actually happen. Anu.
Okay, thank you. So moving on to the next slide, I was just explaining that, of course, there is a company taxonomy which comprises of all of these, items. But the company taxonomy very essentially has something called as link basis, which I'm going to explain in the next slide. So link basis, there are 4 types of link basis which every company is supposed to go ahead and prepare. They're called a presentation link, calculation link, definition link, and a label link. So presentation link base is, the example that I'm going to give you is that, for example, the ESEF taxonomy has its own way of reporting. For example, it starts with revenues, it has cost of sales, gross profit, etc. And as a company, every company has their own way of reporting. So therefore, what is expected by every company is that something called as a presentation link base, which actually shows the sequence of what the company is reporting in its annual report. It cannot add more elements, it cannot skip elements, but it should exactly have the same sequence of what it is preparing in the annual report. Only then the machines will be able to actually read what are the sequence of items that is reported in XBRL. So in short, the presentation link base is a replica of what the company is reporting on the face of the annual report. Another guideline which ESMA says is that whenever there are summation relationships or relationships which is adding, deducting, for example, revenue minus cost of sales is gross profit, or current assets plus non-current assets is total assets. or cash plus debtors, etc., is equal to total current assets. So whenever there are calculations or summation relationships defined by the company in its annual report, for that specific statement, there is something called as a calculation link base that necessarily has to be prepared. Thirdly, there is a third link base, which is called as a definition link base. And here I'd like to take an example of the statement of stockholders' equity. In the statement of stockholders' equity, companies report an opening balance of equity. There is a variation for a 12-month period, and there is a closing balance for equity. And there are different types of equity that a company reports. For example, issued capital, share premium, treasury shares, non-controlling interest, etc. So there are many items that the company reports in a stockholder's equity. And if you were to create a tag or define a tag for each of these items, there'll be like a huge list of tags that either are possibly extensions. So therefore, what ESMA has done is that based on the IFRS taxonomy, there is something called as dimensions. There's a concept called as dimensions used for the statement of stockholders' equity. And wherever there is a concept of dimensions used, it is expected that the preparer of the IXBRL is actually preparing something called as a definition link base. And by the way, the anchoring, which we just spoke about in the last slide, companies are required to prepare and define anchoring relationships also in this definition link base. So as an auditor, if you want to see where the anchoring relationships are, you should be definitely seeing in the definition link base. And you should also be taking a look at the stockholders' equity, not only in the presentation link, but also in the definition link base. And the next, the last set of link base, which a company is supposed to prepare, is called as a label link base. So as an example, in the first example, which I showed you, the company had reported sales, but in the taxonomy, there was a tag called revenue, which means in the ESEF taxonomy, the label or the label for the tag IFRS full revenue is revenue, but here the company is reporting sales. What is expected by every company by ESMA and in the reporting manual is the fact that every company has to prepare its own company specific labels. So this is so that from a regulator perspective or from an investor perspective or for any analyst who is kind of tracking the company, they are able to identify what is this company exactly reporting about. So therefore, the label link base actually defines what information is this company reporting in its annual report. So companies have the ability to define their own labels so that then it becomes easy for people who are using this information. So these are the 4 types of link bases that needs to be created as part of the company taxonomy. So in short, it is the XHTML file, which is the human readable file, and it is the XBRL link bases and the company taxonomy, which forms the machine readable set of files. So combination of XHTML and these machine readable files is going to be the final package that is required to be submitted to the regulators. I thought it's kind of useful to kind of give a quick checklist of what items need to be audited and what items need specific attention. This is especially from our experience of working with so many companies across so many countries. So the first thing from an audit or a review perspective is to see that an appropriate XBRL tag is actually chosen by the company. So one of the prerequisites is that the company is supposed to go through the annual report, see what is available in the taxonomy, read the IFRS references, and also, there's something called as a documentation label, which means for each concept, there is a meaning given to that XBRL tag. So companies are supposed to go through the annual report, read the disclosures, identify the right tags in the taxonomy based on IFRS references and documentation, and choose those tags. So, and one other important thing that ESMA actually again mentions in its ESEF reporting manual is the fact that as far as possible, companies are supposed to use the tags from the ESEF taxonomy. And only when they do not find a tag, they need to create an extension, which I'll cover in a separate point below. So the first thing that you need to make sure is the choice of tag, what the company has picked, whether it is correct or not. Apart from the tag which has been picked, another important thing that you need to review is the units and the scale. So for example, we've seen in some filings, let's say there's like an impairment loss, let's say 100 million euros. Instead of denoting that this is reported in euros, we've seen some companies reporting in shares, which is like an incorrect unit. So it is not just the tag which is important to be right, it is also important that the units assigned, the scale assigned is also correct. Another thing that is kind of very important, moving on to the next point, what we've kind of also seen again in many, many companies, especially in the US, is that, there are a lot of companies who get their numbers wrong in terms of signage, the positives and the negatives. Another important thing point here that we'd like to convey is that the ESEF taxonomy itself is structured or modeled in such a way that there are some numbers expected as positive values, there are some numbers expected as negative values. Again, coming back to the same example where you have revenue less cost of sales is equal to gross profit. If you take a look at the taxonomy, the cost of sales is already factored as a reduction. So therefore, when you again report a negative value to cost of sales, what happens is that the minus that you're reporting and the minus which is already factored in the taxonomy nullifies out, and it, instead of reducing, it gets added back. So things like this becomes very critical, and once you have your signage is wrong, then it becomes very difficult, and later on in the validation stage you'll get ton loads of validation errors. So therefore, as part of the review, it is also important not to just see the tags, the units and the scales, but also see the modeling in the taxonomy which is present, and therefore then decide which numbers should be positive for XBRL purposes and what numbers should be negative for XBRL purposes. So this doesn't mean that the company needs to change its reporting of positive and negatives in the annual report, but from an XBRL perspective, there are certain things which are already predefined, which needs to be taken into account. And like I said, in the US, one of the most common mistake that we have seen is companies get their signage wrong. Now that, let's assume that you've taken a look at the tag, the unit scale, and the signages, what is also next very important to review is actually the company taxonomy. So in the company taxonomy, every company, of course, by now we know that we'll be preparing a presentation link base, calculation link base, definition link base, and a label link base. So in the presentation link base, as an auditor or as a reviewer, what you're required to go ahead and see is that whether the presentation link base created by the company exactly mirrors what the company has reported. Are there any items which are extra? Are there any items which the company has missed to report in the presentation link base? Is something that you need to definitely watch out for. Moving on to the calculation link base, now that we know that, for example, in the income statement, there is an arithmetic relationship, right? It starts with revenues and goes all the way till profit after taxes as an example. So in this case, when there is an arithmetic relationship, the company necessarily has to prepare a calculation link base. And in this case, from an audit perspective and from a review perspective, what you need to take a look at is to see whether the company has prepared a calculation link base, and if it has prepared, has it included all the elements that is actually needed, or has it skipped including any of the items needed. So the minute you skip something, or if you add anything extra, again, the totals will not match up, which will give validation results or errors. Moving on to the next one, which is the label link base. So in the label link base is where the company defines their own labels, what the company is reporting. So if the company is reporting sales, so ideally when you review the labels in the XBRL also, there should be a label defined called as, sales. So when you're reviewing the label link base, definitely watch out to see the sequence or, the label defined by the company and whether it's matching in the label link base. And similarly, in the definition link base, like I mentioned, anchoring needs to be defined in the definition link base. When you report stockholders' equity, again, there is a particular way in which the definition link base needs to be structured when it comes to stockholders' equity. And for those who are not very familiar with the structuring of, dimensions for stockholders' equity, I highly encourage you to take a look at the taxonomy modeling for this particular statement, because in the definition link base, there is a unique way where companies are supposed to go ahead and prepare. So these were the main important points from a company taxonomy perspective. And now that we know that the company taxonomy consists of link bases, it also consists of ESEF concepts and also extensions. Moving on to extensions, what is important from a review perspective in terms of extensions? Again, if we take a look at the taxonomy, each element which is there in the taxonomy has a particular naming convention already defined in the taxonomy, and it is called as an LC3 naming convention, which means that each letter, let's say if I'm creating an extension called maybe impairment of receivables. So each first letter of each word needs to be in capitals, and the name of the element should not have spaces. And similarly, for each extension, there needs to be a documentation label defined. So documentation is nothing but when you create an extension, you're supposed to explain what is the extension that you're trying to report. What are you trying to report in this case? So you need to give an explanation of what you're trying to report in this case. So here, from an audit perspective, you need to make sure that the extension that is being created is as per the naming convention. And this is also available in the ESEF reporting manual, the naming convention for extensions. And the extension should also have a documentation label defined and of course a company specific label defined as well. And moving on to the next one, now that again extensions needs to be created only when necessary. I think another very important point here is that when you're taking a look at extensions, you need to see first of all whether this extension is even necessary, right? Is there some other broader concept which is available in the taxonomy that could perhaps be used? So when you're reviewing extensions, of course, please, apart from all of these things, the very important point that you need to watch out for is that, is this extension even necessary or is it, must? Only if it is a must, then should it be allowed to be created. And now once the extensions are reviewed, and again, there are certain guidelines, not all extensions needs to be anchored. And sometime back, we spoke a little bit about anchoring. Anchoring is nothing but, whenever you create extensions, you're supposed to report what are you trying to report in the taxonomy. What is the closest accounting meaning available in the taxonomy? And again, there are guidelines for anchoring. So if you take a look at the ESEF reporting manual, and there are also articles published by XBRL International. There are also articles published on our website that gives guidelines on when to anchor, when not to anchor. So whenever there are extensions, it's not a must that every extension needs to be anchored. So as an example, if I'm reporting A plus B is equal to C, if A is an extension, B is an extension, and C is also an extension. So ESMA reporting manual says that since A and B both are extensions, C need not be an extension. So I think, again, there are a lot of companies who think, okay, I'm extending, so therefore it's mandatory to create an anchoring relationship. It is not so. So again, here I would highly encourage all of you to go ahead and take a look at the guidelines for anchoring if you've not already. While these are all items that we've kind of explained so far, mainly on the tagging aspects, what is also very important is in terms of validations. So ESMA again prescribes certain validation rules. For example, mandatory tags, there are 10 mandatory tags. There are some calculation checks. There are rules defined by XBRL International. So as an auditor, it's also important that you go ahead and make sure that the ESEF package that companies are reporting to you are in conformance with the rules defined by the reporting manual, which is defined by ESMA, and also rules defined by XBRL International. So it's kind of very important that you take a look at this as well, because it's in the validations where you will be able to see what are the items which are flagged off. Assuming that we've done all of these steps, the last step is to go ahead and take a look at the package which is generated, because there are guidelines again for the naming convention, etc., which is important to be gone ahead and seen. And finally, it's also important that you take a look at the RXBRL viewer. So if you just open up an RXBRL package on a browser, you will not be able to see tags. You will need a viewer in order to go ahead and see it. So whenever you're going to go ahead with a review process, or if you're trying to look for a solution for audit or or a tool for audit, make sure that this tool has a validator and also a viewer so that you can see the machine readable tags. And you can also review the document. So this is a quick checklist that we've kind of prepared. And the next few minutes, we're just going to go and present to you a very, very quick overview of how an audit could be done using our audit tool here.
I know you got 5 minutes for the demo, but before that, a question from Mika Kuhanen. Mika asks, at the current moment, audit requirement relating to ESEF is not mandatory. Mika, while you posted the question quite some time ago, I took my time to react because I went to the website of both ESEF as well as XBRL International to find out what the current status is, and I'm confused. All that I know is many audit firms across Europe have been working with us, looking at the audit tool, and also trying to figure out how to do the audit. I think whether it's there or not there, we have the solutions available. If it's there, I think companies will get greater comfort. If it's not there, I mean, that basically means our revenues will go down, but that's fine. I think it's important to ensure that the data sort of that's submitted is submitted accurately. Anu?
Okay. So I hope all of you are able to see my screen, which is called.
And one more thing, while Anu is doing the demo, if you have questions, please post them on the chat box. We will answer every question. And I'm also confirmed by my colleagues that a mail has gone to every one of you with the list of the 707 companies. If any of them are your customers, please reach out to us. We will get back to you with a copy of the document, and we will also reach back to you the quality report of the companies if they are your customers. Otherwise, it will forever stay a secret. And go on.
Okay. So I'm just going to show you a very quick example of how an audit can be done. So in this example, I'm going to create a project. I'm working for a company called Delticom. I could have access of different companies like BMW, Merckx, etc. But now I'm sticking to Delticom. I want to say that ESEF audit for Delticom, right? So I'm just going to go ahead and create a project here. And I can just go ahead and upload a zip file. Let's say the company has given you a zip file and ESEF reporting package. So I can go ahead and upload the zip file here. So once I go ahead and upload the zip file, I can go ahead and also define for which period I'm doing the audit. So this is for 2019. So I'm doing the audit for 2019 annual report. And I would simply say upload. Once I do that, you'll see a new project getting created here. So it shows the name of the project, who's the owner. It shows you a summary because right now I have not started any audit. So it's gonna just show me all zeros. I can also invite other colleagues of mine. I can upload versions. I can invite other colleagues of mine from an audit perspective. For example, if I want a colleague of mine to be a reviewer for this project, I can do that. Let's say the partner has to sign off. I can invite a partner and also give like sign off rights. I can do all of this and directly start the project. So I'm going to lock this project because the tool is also collaborative. And in this case, I'll be able to go ahead and do the audit process. So once I come in here, this particular project, it also detects that this is in German language. If I want, I can change the UI into German, but for now, I'll just stick to English since the audience that we have are from different countries. So what you see here right now is not a PDF. It is an inline XBRL document that is actually visible to you. It is on the web. And this is a viewer that we are showing you that is integrated into the audit tool. So if you take a look at the numbers here, each of them have highlights. So I can simply click on a number and it's going to show me the tag, the value, the date, and currency, etc. So here I can see that overall this particular number, it's reported in shares. This is incorrect. I can simply reject this. And when I reject this, I can leave a comment saying that unit should be, euros. So I can simply go ahead and reject tags. If I find, tags which are correct, I can approve. The minute I raise a particular item as reject, there is also a comment that gets raised automatically. For example, if I want to go ahead and check some other numbers, I can click on this. And this is also kind of in shares. So I can say reject, same comment as above. And similarly, you can just move on with the review process. So for example, this is depreciation amortization, it's in thousands. This is fine. I'm going to go ahead and approve. Furthermore, I'm just going to go one by one. In this example, this is an extension. I'm not 100% sure if this is correct. I want to put it on hold. I can say, double check if this is needed. So I can go ahead and do all of these things so that, I can go ahead and take a look at each and every tag here. So this is one way where you can go ahead and review. There's a commenting panel. If I want to see the full list of tags, I can go ahead and do it as well. So, I can select on the, facts item here, there's a list of tags that will be available. If I want to go ahead and see different items, for example, you see some numbers in pink color. So these means these are the mandatory tags, but they are not tagged on the annual report. They're tagged in the hidden section. That's why they appear here. But the items which are tagged on the annual report comes up in like white color, as you can see here. If there is something rejected, it comes in orange color or like a red color in this case. So I can simply click on different numbers and it'll take me to the exact spot in the document. So I can take a look at numbers very easily like this. If I want to go ahead and take a look at the taxonomy, I can do that as well. I can take a look at both, the company taxonomy and the IFRS taxonomy. If I want to go ahead and open any specific items to see, there was an extension. If I want to see if there's another item here that can be used, I can simply click on the tag. I can see the properties. I can see the references. I can do all of those things. So similarly, I can go to the company taxonomy and I can also see all of the link bases that is present in the company taxonomy. So as an example here, if I just open up here, you'll see that a bunch of the tags here, these are all ESEF concepts. That's why it is in black color. I can see that this is from the ESEF taxonomy. Extensions are showed in blue color, and this is a custom tag. So I can go ahead and see the taxonomy. I can see the various link bases. I can see the anchoring relationships, which has been defined. I can see all of them. And while these were like quick ways how to review the tagging, it's also important that you run validations. So there is an XBRL International Certified Validator available here that checks for all the rules defined by ESMA and also from an XBRL International perspective. So as an example, one of the validation results says that there's a missing mandatory tag, which needs to be corrected. There's another validation result says it's revenue, but a wrong currency has been given. You can go ahead and validate your documents very easily What we will also bring is like a navigation to the document so that you can spot errors. There are various reports that you can go ahead and generate. Let's say I want to see the list of all commons. I can see a quick all commons report. I can export it into an Excel file. If I want to see the list of all the facts in this document, I can pull up an all fact report and see the status of the review, etc. I could also compare different versions. So that's something we are bringing in. I can also see the list of extensions. I can see the list of validations. So this is like one comprehensive tool that you can go ahead and go about from a review process. Of course, we have workflows on audit trail, sign-off process, etc. So this was very, very quickly to show you from an audit perspective, how does one go about the audit process? So quickly to summarize, from an audit or a reviewing perspective, what is important? It is very important that the software, whatever you're choosing, is able to validate the reports easily, trace errors and warnings. If there are any omissions, it should be able to show you the omissions. And it's best that the tool is actually collaborative, because you may want to collaborate internally within the audit firm and between the companies. So a collaborative tool anytime is a best choice. And having an XBRL International certified validator and a product is extremely useful, because then you know that the product complies with all of the regulations. And very important is the ability to view the company taxonomy. Again, I know that a lot of companies are focusing on tax selection. They are not focusing on company taxonomy because they don't know it. But as an audit firm or a reviewer, it's very important that you actually take a look at the company taxonomy. You should be able to see the extension. You should be able to see the anchoring. All of them, only when you're able to see, only then you're able to sign off. And similarly, there are platforms that are able to go ahead and suggest what should be an ideal concept that should be used, is an extension necessary or not. And finally, from an audit perspective, always audit trails are important. You may receive multiple versions of the ESEF document, etc., all of which needs to be managed in one platform. So with this, actually, I come to the end of the presentation. And if there are any other questions, I think Swami has been tracking questions. I have not been, but if there are any questions, you can give a few minutes. You can raise your question in the Q&A or in the chat box, and we'll be happy to answer the questions.
Or if you wish to email your questions to us, we're very, very happy to answer them as well. And as I mentioned to you a little while ago, my colleague has confirmed that everybody on this call has received a copy of all the companies. We have all the companies that we have reviewed. We have not shared with you the companies where mistakes were found. Once, if you see companies in which you have an interest as an auditor and you want to verify if it's okay, please send us a mail, and then we will respond to you and talk to you about any mistakes we may have found in that company. It's not our intention to reveal the names of the companies, otherwise, except to the auditor and to the companies themselves. We have spoken to many companies and told them about the mistakes. They've accepted it.
Okay, so I think if anybody has any questions on what we've covered so far, or if any of the participants have, if you're kind of interested in seeing a more detailed round of our study or on how to go about with the audit process, we are more than happy to answer any questions and also assist you in any manner. So feel free to drop an email to info@iriscarbon.com, and please make a note of the ID. It is info, INFO, @iriscarbon.com, and we'll be very happy to answer your questions or any requests that you may have.
Thank you very, very much for participating in this webinar today. I can say thank you in a few languages. While Greek, I think Italian, French are all fairly easy. I'll say it in Greek, because I can see a couple of Greeks on the seminar, at least people with Greek sounding names. Grazie, of course, fairly easy. Winfried, do you want to deliver the last line in German or Italian? I have a colleague from Germany, a German colleague of mine who lives in Barcelona, married to an Italian. How complicated, right? So Winnie, you want to deliver the closing line in a combination of Italian and German?
Okay, vielen Dank für Ihre Partizipation, und ich wünsche Ihnen im Namen der Firma Iris Carbon einen wunderschönen Nachmittag. Grazie mille per partecipare oggi e ci vediamo pronto. Mille grazie, arrivederci.
Español.
Buenos días a todos. Muchísimas gracias.
On that note, muchísimas gracias. Thank you very much, and we'll be in touch. Bye-bye.
Thank you, everyone, for your participation. Appreciate your time and availability. Thank you. And bye-bye. Have a lovely evening.